Alright guys, today we're going to be doing kind of a basic what I try to do in my trading every day. I'm just going to go over kind of simply what I do each morning in order to frame a trade idea. I'm going to try to make this as simple as possible. So what I usually do is I mark the 9:30 and the 10 o'clock, which is the first 30 minutes, which is the first opening range, first 30 minutes. And then what I want to do, and this is what I'm learning from ICT, so this is going to be all concepts from him. We're going to mark out the first presented fair value gap, which was not that one actually, it's this one. And then we're going to mark out the highs and lows between that. So we have this, and then we have this high right here. All right. And these other boxes are also the same thing from previous days, which I like to use because they usually react off of it. All right, so now we have another range, which is the afternoon range. What we're gonna do is the 1:30 to 2 o'clock. Boom. Same thing. The high and the low. And I'm still trying to figure out if I'm allowed to use the 2 o'clock or if it's only the 1:59. But just for this example, we're just going to use it. Okay, so we still have to mark the first presented fair value gap. So it'd probably be this one right here. And this one we make blue. All right. Now that we have that, what I like to do is a top-down analysis. And I like to look at a monthly, a weekly chart, and then also a daily. Let me just show you on this real quick. So we have a daily, and we can see that we have a huge fair value gap right here on the daily chart. So I think that's our main objective for long term. So we still have ways up to go. So this market is looking very bullish to reach up there. You know, we've been going up for so long. So I do expect a retracement around this level. If not, can reach all the way up here. We have 1 high, 2 high, 3 high. So that's just a basic long term, just to quickly go over. And then what I also like to do is go to the 4 hour and the 1 hour. And on the 4 hour, we don't have any fair value gaps. The one we have is, let's see if I can pull it up, it would be like all the way down here. If you guys can see my white. On the 1 hour, we took liquidity out on this high right here. We took out these relative equal highs right here. So we already took that out. But I still think we might reach up there. But we can't expect price to go lower I'm trying to see if we have any fair value gaps on the 1 hour that hasn't been filled, and we do. And it would be all the way down here. Yeah, this area right here, which is also the 4 hour. This is our first presented fair value gap in the afternoon range. So I would want to see if, not necessarily trade immediately when it reaches into this. This could act as resistance, or it can act as like a reclaimed fair value gap. So it would go over it, come back down, touch it, and then keep on going higher. Maybe we can reach the afternoon high, opening range, not opening, afternoon range high. We do have a fair value gap right here, so I'm not necessarily taking any trades, but I do want to see how the market reacts and observe. So if I'm not mistaken, this was our morning opening range, the first presented fair value gap. If we come back to it, usually this would act as resistance, but we can see that it failed and just went straight to it, and it went to an old one over here, and an old one right here, and an old one right here. So price goes lower, higher, it uses it as support. Same thing right here, support. And then we're kind of using all these three as well. This one right here too. And then eventually it breaks down, goes lower. We do create a huge wick, but we did use that very small, just like how it said it was insignificant. It actually did use it right here, and the body of the candle stayed on the high of that, and then we react strongly up. So that could have been a trade that we could have taken. We did have relative equal highs right here, so that could have been a trade setup if we were trading during this time, but I wasn't in the charts. So we had relative equal highs right here, relative equal highs right here. And now what I want to see is if the market wants to reach into here and then attack the afternoon high. So I do see a fair value gap right here. I'm gonna mark it with these two lines right here. It's very small. And for those that don't know what I'm talking about, a fair value gap is when a candle only has green and we never traded off of it, like sold. In this case, everybody bought right here. The price jumped up and we had no red candles in between here. So it would be technically inefficient. It would be unbalanced. So price would want to come back into it to fill it in and then react up. A clearer example would probably be right here. We see only green here. So we'd get the high of this candle and then the low of this one. The same thing, reacts off of that one. We do have this one that's unfilled as well. We don't have really any other clearer example, but for now, we're going to use this one. We're going to see if this fair value gap does respect price into like what it actually wants to do. So I expect price here to want to go higher. And then I guess my question would be to myself, would I want to trade this? Probably not, only because we're already almost to the 50% range. We're already above it. So anything higher would be technically premium. And based on my rules, I don't want to be buying in a premium level. Premium level is anything above 50%. It's just more probability that the price is going to want to go lower. And my trading is based off on probabilities, so I don't want to be buying long in this situation. But we are reaching into that first presented fair value gap in the afternoon range. And then we did have old relative equal highs on this black line right here at 6,030.75. So right here, I just really want to observe and see what price does. And then if we do decide to use this as a support, I also do want to see if we reach into this resistance level, which is a SIBI. I forget the term of it. Sell side imbalance, buy side inefficiency, I think. And then we're also reaching into a OTE of this range. So I also want to observe if price wants to use this as, you know, like a selling zone with the SIBI. Because maybe there's two options. We reach into this daily, or we reach around down here, which there is a 1 hour fair value gap and a 4 hour that hasn't been touched. So this is not financial advice, but if I were to be a trader and I wanted the best probabilities, I would either want to sell in this area or buy all the way down here. But that doesn't mean you can't take a trade here, just like how we had this fair value gap react. So 27, right now we're at like 32, so that'd be like 5 points. I'm pretty sure on the E-mini, it would probably be like around like $300. So my trading strategy is always $300. So just because, you know, we're not in a discount doesn't mean we can't take a trade. But from my experience, I've tended to fail a lot more when I try to do these little trades right here. But it's all depending on your risk tolerance and all that. But for me, I'm trying to be more disciplined and a little bit more smart in my trades. So I'd rather just not take a trade and just be more patient. But yeah, I'm gonna be using that exactly what I showed you, the highs and lows of the morning range, afternoon range, first presented fair value gaps, new day opening gaps, new week opening gaps to form a trade. I'm not saying I know exactly what I'm doing, but you know, it's just a whole process of observing, planning, and then forming a trade idea. And just being more self-disciplined and smart. Instead of taking a trade just to trade, you know, I would recommend that you tell yourself I think the market's gonna go here, and this is why. Okay, well, now that you have an idea of where you think the market's gonna go, you can say, I'm gonna either buy or sell here. But then after that, you have to tell yourself, I think after this, the market's gonna go over here. So instead of just randomly doing things, you're now taking trades based on logic and not just randomness, which I think is a whole lot better than just randomly trading and getting lucky. Because over time, if you actually do put in the work, your own results will be, your own success. And I've traded in the past where I've taken trades without using logic or reasoning behind my trades based on what I think the market's going to do. And you don't feel the same satisfaction of actually predicting the market. It's just not the same. Okay, so right here we went straight through it. So we didn't even respect this. This can also, just like I said, we can reach into the daily. And we still have an hour left, so the market can reach all the way up there. We've taken out, so we did have relative equals highs here. We took it out right here, like we attacked it, triggering, what would it be, buy stops or sell stops, stop loss orders. So we can expect the retracement here, but if not, we can use this as support again. So right here is probably one of those areas where you actually want to observe and focus. Not necessarily take a trade, but just study what price does after taking out this liquidity over here. So we created a fair value gap here. We want to see if it acts as what we said before. We'd want it to come down here and then react higher. But if it does not, it can go straight through it, come back up to it, and act as resistance. So right here, it's kind of hard to tell, but I don't think we've touched it or went into it yet. Right here would be a kind of crucial point, because I know me before I'd probably be buying long here, and we've already hit liquidity over here on this black line. So it's kind of just like chasing price, being greedy, thinking the price is gonna go higher. But I would recommend that you do the opposite in this situation. There's more probability that we go lower. But I guess my question would be, how much lower if we do go down from here? Well, we have to make sure and be safe, because the price can go into here and then go higher. So right here wouldn't be necessarily a selling point for me. I guess the main focus right now is looking at this one right here, seeing what it does from here. Just playing it more safe than just chasing price. I've been studying a little bit on wicks, so I do want to see what this wick does. So if this wick is going to act as resistance, where I'd want it to hit is probably the 0.5 level. If it doesn't want to go higher than that, that could be a good indication that we want to go lower. and then we can use this and see if this acts as support, and if it does not, then we can go lower. And then if I were to sell, I'd want it to come back up to here and then go lower. But price can be unpredictable. That's why you want to kind of read what each candle is doing. So right now, based on what I'm seeing, is price is, just hanging around in this area until a specific time and price. One of the things ICT says is that price moves with time. So if the time is not right, the price will not move. Okay, so right here we didn't use that wick. So what I'm looking at is anything up here could be used as like a manipulation. But right here, I think this would be one of my trading ideas where I think the market would want to go lower if we don't use this fair value gap right here. If it goes through it, we can come back right up to it. Now what I would want to see is it act as resistance right here. Okay, so what I'm thinking is price can go higher, but it can create a wick. Now it's gonna color outside the lines. What I'm really looking for is if the bodies of the candle stay below that. So we're just gonna take a trade for an example. So we're gonna sell it here. We'd want to use this as a stop. And a point where I'd want to sell could be this high. And it can be into this fair value gap right here. Right here, we're kind of just hanging around in this fair value gap. Usually what I would want to see if this was a strong one, this candle, touch it, and then just react higher. I don't really like seeing it hang around too much around here if it were to want to go higher, just in case this does fail. It's not necessarily a loss because this is definitely a good opportunity for you, or for me in this case, to journal this trade, which I will be doing in every trade. Gonna be writing down why I bought, why I sold, where I thought it was gonna go, where it actually went, what time did I enter, why, all that good stuff. Just so, because I know when you say you're in school and you're taking notes, I know definitely it does help when you take notes. It just helps it ingrain into your brain so you recognize what happens in each trade. So when I take a loss, it's not necessarily a loss for me, because it's always a learning opportunity every time that you do take a trade. And just like I said before, I think we can use this as support. The old highs that we had all the way over here, the black line from earlier. That's also one thing that we want to study, is if the price does want to use that as support, just so you know for next time that you're in a situation like this. If we did want to see price going lower, I expect there to be just red or black candles in my case. So the body of that candle stayed right in top. So this one can do the same exact thing, or we can just react off of this one, like react higher from here, if it does want to act as support. But from here, we can move our stop loss. I'm gonna put it like right here, just so that even if we do get stopped out, we're still positive on our account. Boom. So that trade, we started from over here, from this little fair value gap, from when I noted it, and we took out liquidity over here. We had 1, 2, 3 highs right here, and then we had this one, but it wasn't necessarily, I wouldn't necessarily take this as taking liquidity over here, since it's so close to it. It's still straight line, so something like this I would want to see it really like going higher than all this. And just like I said before, drew this white box because these were the highs from before. So if we take the high, and then from the last high up here, when I look at price, I'm looking at this as like a manipulation. So anything higher, you're kind of just chasing price. So I use the last fair value gap right here. Usually if we do want to go higher, remember like we had the daily range over here, I'd want to see this candle touch it and then react even higher, but I saw that price was kind of hanging around here. So I took it as like, we're probably going to use this as an inversion. Inversion means like it's supposed to go higher, but we used it as resistance instead. And we can see that the bodies of the candle right here really do tell us what price is going to do. Even though we color outside the lines multiple times, the bodies of the candles tell us what price is wanting to do. So that was my idea of why I entered the trade. And the reason I sold right here is because we can use this fair value gap as support, to like retrace higher. We can even go higher than this. But that was a very simple, I think it was 387 trade. Although this is all paper trading, I'm not a financial advisor or anything like that, but I am trying to have trading one of my skill sets. Hopefully by doing this over and over again and showing you guys my progress, my thoughts, what I do wrong, how I try to fix those mistakes, and really trade with purpose. I think hopefully one of you guys can take some of my lessons. Not advice, but you know, my mistakes on what I do, so that you guys can implement it and do something different for your trades. But yeah, I think that was a pretty accurate trade. We sold exactly where we were supposed to. We're now reacting off of this fair value gap. And I think that's kind of it for me trading today.